traders, welcome. So with all the talk of bubbles, some people think that cryptocurrencies are in a bubble, some people think that tech stocks are in a bubble. Let's have a look at historically what a bubble looks like, and let's see if we can see any similarities with what's happening now with any of the current markets. Now this is purely an objective view and looking in. I'm not making observations in terms of I'm not making predictions in terms of whether things are in a bubble or not. I'm just looking at facts, and let's see if we can see some similarities. So this is generally considered the kind of bubble graph that you get. So initially you get the smart money coming in. So that's people that don't really know that it's going to take off, but they think that if it does take off, we're going to get a lot of payoff. It's very high risk at this level here. No one's really heard of it. Maybe it's presented to a few people, they have a little bit of a go at it, and we start to get some traction. Then we move into what's called the awareness phase, or what they've called here as the awareness phase. This is not an official thing by any means, it's just generally kind of the sort of thing that happens, which is when you get people who are a little bit more knowledgeable, institutional investors. It starts spreading around the kind of area and demographic of people who are interested in this kind of thing, and it starts to get a little bit of traction. It starts to double, triple from the sort of smart money phase where it was just getting a little bit of credibility. Institutions start getting involved in it. It just starts to spread through media, perhaps, or in not mass media, but more a case of people who are in the know start to get aware of it. They start to invest in it. It starts to build a bit of momentum. Then you get here what they've labelled as the first sell-off, which is the bear trap. So it's kind of the first time out of all of it where you really get some people, probably the smart money guys, saying, you know what, I'm going to offload a patch of this into this kind of institutional euphoria. A lot of people are getting carried away in my sector, and I'm going to use that to offload some. And that's sort of what you get with your bear trap, or as they've labelled as a bear trap here. Then this is when things start really getting interesting, because you enter this what they call mania phase, where it starts to get media attention. Public start getting involved. People who generally wouldn't be involved in this start getting to hear about it, see it going up. It's all in the newspapers, or it's all in sort of publications that are available to the public. Then people get all excited about it, they're piling in. Some of the early adopters are making lots of money out of it. It's pushing really hard. And then all of a sudden you get people who wish they bought. Now they think, I'm going to buy. I've got to buy now because it's just going crazy. You get people thinking, wow, I missed out, I need to buy more, all that kind of stuff. And that's the greed phase of there's nothing else in their minds other than this is making money and going off without me. I need to be on board. If I'm on board, I need to be more on board. And that's when you get this delusion phase. It can't go down. This is just going to keep going and keep going and keep going. It's just ripping. There's just loads of media attention on it. Loads of people saying how much money they've made. Nobody's saying they've lost any money. It just appears to you that every single person is making millions and billions from trading this instrument, whatever it may be. Pushes up, and then you get the kind of high that says, yeah, we're off, this is the new thing, it's just like the new line in the sand, it's great, it's the best thing in the world. Then you start to pull down. This is what's called the blow off phase here. So it's really at its peak. All the buyers are involved in it. Nobody's lost any money. Everybody's happy. Massive euphoria. Everyone's really feeling really good. And then it starts to come down. You get that first kind of wave of pushing down where you just run out of buyers. It's a simple thing. When you've got something like this, that it's just a pure bubble, if the game is you're just going to lob it out to the greater fool theory, when you get to that point, there is no greater fool. Everybody is in. And so when you get to the point where no one else wants to buy and everyone's bought as much as they dare, no one else is willing to enter, it's got sort of mass saturation, if you like, in terms of exposure to all the people. Then it starts to roll over. You get what they've labelled here as denial, rolling back over, quite a little pullback from the high, a decent percentage. Whereas a lot of people who are trapped in that and are hurting, you get a little spike back up, and people think, yeah, it's going to go back to the highs now. It's just a pullback. It was nothing to worry about. Something and nothing. Maybe there's a little bit of a catalyst that came out that caused that. Dip down, push back up. Off we go. Of course, it's just trapping in buyers. Then we get the true capitulation. So all these people who have bought through here are now struggling, and we get the fear. this is not happening. I've got so much of this. It's going to kill me. I'm losing money every day. Oh my gosh, it's gapped down again in the case of a stock, or in the case of a a bigger asset. Oh no, I can't sell this. I can't sell this. Lowering my price. Still can't sell it. Still can't sell it. And then you just get people just getting out whatever. They've seen their investment turn to complete dust. It's almost worthless, and they're just holding on now, and then just trying to get rid of it at whatever cost possible. If this becomes a shortable instrument, that's when the bears are really piling on the pressure. They're seeing the fear, they're hammering it, and it's a one-way street. If it's a shortable instrument, then you just get the complete sort of blow off that literally everyone just lobs it. Think this is now going back to zero. I can't believe it. They're on margin. It's swung. The emotional thermometer swung from euphoria, should I say, to despair. Then you get this blow-off phase at the bottom, and then it returns back to what they've called the mean. So the kind of fair, if you like, valuation of whatever it may be. So that looks pretty good, and that makes a lot of sense. And if you look at bubbles from history, that's pretty much the kind of thing that happened. Then I found this picture of a tulip bubble, a graph, should I say, of the tulip bubble. If you remember this and go and read it, it's really fascinating from a trading perspective how these new tulip bulbs were imported in. And everyone just was going crazy for them. They were selling farms for literally a couple of these tulip bulbs. They were selling livestock. They were selling just all sorts of valuable assets to get hold of tulip bulbs, which of course, as we know, it's just a flower. So this is the kind of thing. If you look at the time period as well, it's a decent amount of time. It's a couple of years. From December, so it's sort of early. If you say 35 to the end of 36, really, that it's 2 years, 1635 to 1636, really, because it's the end of December in the early part. So 2 whole years it took for this to rip from whatever that is 1 to 60. I mean, that's the price of of an asset, or supposedly an asset that is just now we're looking at it, it's a flower. There's no intrinsic value to it. Eventually, it's going to die. This is the kind of thing that was happening. Of course, it's human nature and psychology. This is the point of the bubble. It doesn't really matter what the asset is. It could be housing, it could be a flower bulb, it could be a stock, a company, it could be a cryptocurrency, it could be, I'm not saying these are in bubbles by the way, I'm just saying it could be any of these things, but it's how people perceive the value. And then the greed gets the better of people, the euphoria. We go back to that other chart and you can see the different, see the kind of phases that we get. And then reality dawns and it's just pure back to where it was. So let's have a look at the NASDAQ. If I can bring this into the chart so we can, into the screen so we can see it. So there's the NASDAQ. It's a logarithmic chart from about, I think I've got 20 years on that. Let's just check. I've got 30 years. Oh, let me go back onto the NASDAQ. I've got 30 years because that's going to show us a little bit better what's going on. Okay, so you can see, we kind of, it's the explosion towards the upside. And if you look at that chart that we were using before, it's almost identical. You get the push up, you get the pull back. This is a bull trap, and then that's that fear phase, that capitulation phase that we saw right in here. So that's the NASDAQ. And what else have we got? This a bubble. I'm going to bring up. Controversially, let me bring up Ethereum, guys, and I'll show you whether we think that this is in a bubble or not. ETHUSD. This is Ethereum, and this is a daily chart. If I bring it up, here we go. So we have the push up, the sort of smart money, perhaps. I'm just speculating here. Institutional money. Now we get this euphoria, excitement, and then we've got. Is this the first part of the pullback here? Is this the kind of correction, the bull trap? And then if we break this low, are we going to get the panic to the downside? Who knows? It's just interesting to see the similarities. And if we look at Bitcoin, not quite the same, but we did have this kind of euphoria, this spike up, and this really incredible rally from the lows. If we have a look at something like the S&P 500, some people say that stocks are in a bubble. I don't see the similarities there. I see we've got a steady uptrend. We haven't had that kind of really aggressive drive to the upside that we have with other bubble charts. Let me just briefly show you some of this thing, guys. This is something I was trading a while ago. I don't know if any of you are familiar with this thing. John McAfee. There's a big story behind it. Go and check it out. It's quite interesting. This is exactly the same kind of thing when you get euphoria and people just getting carried away. You went from kind of nothing pretty much to to $5.50 for a company that was really doing nothing. There was no fundamental reason for that, and I know you don't have to necessarily have a fundamental reason. You kind of can sign a contract or you can win something, but there wasn't any real concrete catalyst that this is worth this. But again, it's just pure supply demand, and of course that burst. If we go and look at something else like Lakeland Industries, that was another one. Let me scroll back and find out where it was. You know, these are kind of small stocks, but and it's not really the bubble kind of thing, because they're just really in a couple of week windows. But the point I'm trying to make here is, if we look at history, human nature doesn't change. Human nature remains the same. We have the greed in us, and people who are getting involved. If you look at the Chinese stock market, exactly the same kind of thing. People are getting involved, haven't seen loss. They put all the kind of common sense, if you like, out the window. And of course, when it turns nasty, it does turn nasty. So I thought it was interesting. There's a few things now that could potentially be in a bubble. If we believe that that's the case, or perhaps they're not. Perhaps we've learned our lesson and things are going to smooth out. But these kind of things with each individual stocks are happening all the time. If you're looking at FinViz and stuff, you can screen for those specifically. Not very easy to trade via a spread bet, but from a pure trading perspective, they're interesting to look at. And then keep an eye on things like Ethereum and Bitcoin and some other kind of bigger stocks as well, just to see if you think that they're in a bubble.